Hey everyone, welcome back to Corporate Dakota, the place where we unpack the hidden stories in financial reports to keep you ahead of the game. Today we're diving into Amaze Holdings Incorporated's latest filing, and let's just say they've got a bit of a scheduling hiccup and a big vote coming up. So what is the big news from Amaze Holdings Incorporated this time around? Well, it looks like they had to postpone a meeting and now they're reconvening it. Think of it like this: they had a big shareholders meeting planned, but not enough people showed up, so they had to reschedule. This is actually pretty important because it means shareholders need to vote on something significant. The company we're looking at today is Amaze Holdings Incorporated, formerly known as Fresh Fine Wine Incorporated. They are incorporated in Nevada and have a stock symbol AMZE, traded on the NYSE American. The filing tells us it is the 12th of December 2025 and they are reporting on recent events. This particular report is a Form 8K, which is like a breaking news announcement for public companies. It is used to report major events that shareholders should know about. It is not a regular financial report like a quarterly or annual one, but rather an update on specific happenings. The first item here talks about something called Regulation FD disclosure. This essentially means they are making sure all investors get the same important information at the same time. No one gets a special heads up. On the 12th of December 2025, Amaze Holdings Incorporated issued a press release to announce they will be holding their special meeting of stockholders again. This meeting was originally planned but had to be adjourned, which is a fancy word for postponed. The meeting is now set for the 4th of February 2026. This next part gets to the heart of why this meeting is important. They had to adjourn the original meeting because not enough shareholders were present to make any official decisions. This is called not having a quorum, so they're trying again on the 4th of February 2025, but it should be the 4th of February 2026. We think there might be a typo here in the filing. A notice about this new date and time is going out to all shareholders who own stock as of the 7th of November 2025. Now, for the real juicy bit here, shareholders will be voting on something crucial to comply with NYSE American Company Guide rules. They need to approve the issuance of shares of common stock when certain convertible notes that were originally sold at a discount are converted. This is to make sure they do not exceed a specific limit on how many shares they can issue without prior approval. What does this mean in plain English? Amaze Holdings Incorporated has some debt that can be turned into their stock. They need shareholder approval to issue more stock than they originally planned for this conversion. This is a common practice when companies are raising capital or have certain types of debt. The reason for this vote is to get approval for issuing more than 19.9% of their stock as part of these convertible notes. This limit is in place to protect existing shareholders from their ownership being diluted too much too quickly. Interestingly, the report also indicates that Amaze Holdings Incorporated is an emerging growth company. This means they are a relatively new company and may have certain advantages like being able to delay adopting new accounting standards. This could allow them more flexibility in how they report their financials in the short term. The filing also lists what are called exhibits. These are supporting documents. Here, Exhibit 99.1 is the press release dated the 12th of December 2025, which contains the information about reconvening the meeting. Finally, the report is signed off by Aaron Day, the Chief Executive Officer of Amaze Holdings Incorporated. This signature confirms that the company is officially reporting this information. Now let's put on our investor hats and see what this really means. Amaze Holdings Incorporation is facing a critical shareholder vote. The need for this vote stems from their convertible debt. Essentially, they have a debt that can be converted into shares of their company's stock. The current debt agreements have a cap, which means they cannot simply convert an unlimited amount of debt into stock without the shareholders saying it is okay. This 19.9% exchange cap is a critical threshold. If they need to issue more shares than this cap allows to settle their debt obligations, they must get a direct vote of approval from their shareholders. Think about the implications here. If shareholders do not approve this measure, Amaze Holdings Incorporated might face difficulties in managing its debt obligations. This could potentially lead to financial strain or force them to seek alternative, often more expensive methods of refinancing or raising capital. On the other hand, if shareholders approve, it signals a level of confidence in the company's future prospects and its ability to manage its debt effectively. The fact that they had to adjourn the initial meeting due to a lack of quorum is a bit of a red flag. It suggests either a lack of engagement from their shareholders or perhaps some underlying concern about the proposals themselves. For a company that is also identified as an emerging growth company, this kind of shareholder participation is really important. Emerging growth companies often rely on shareholder support to fuel their growth plans. We are not seeing specific financial numbers in this particular 8K filing, as it is an event-driven report, not a regular financial statement. However, the underlying reason for this special meeting, the conversion of debt into equity, is directly tied to the company's financial health and capital structure. Investors will be watching this vote very closely. A successful approval would likely be seen as a positive step towards resolving their debt situation and clearing the path for future growth. A failed vote, however, could create significant uncertainty and potentially impact the company's stock price. Looking at the broader picture, Amaze Holdings Incorporated, formerly Fresh Fine Wine, Incorporated is navigating the challenges of managing its growth and its financial commitments. The decision to issue convertible debt and the subsequent need for shareholder approval highlights the delicate balance companies must strike between leveraging debt for growth and maintaining shareholder value. So what is my take on this? Amaze Holdings Incorporated is at a crossroads. The upcoming shareholder vote is a significant event that will shape the company's financial future. The adjourned meeting raises some concerns about shareholder engagement, but the core issue, the conversion of debt, is a necessary step for many growing companies. The key will be how shareholders perceive the company's long-term strategy and its ability to deliver on its promises. Investors should clearly understand the dilutive impact of approving the issuance of new shares and weigh that against the company's need to manage its debt. Alright, that is our breakdown of Amaze Holdings Incorporated's latest filing. What is your take on these upcoming shareholder votes and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for more community discussions. Thanks for watching. See you next time.